Hey everyone, and welcome back to Talk Tickers. It's earnings season, and you know what that means. We're diving into another big earnings call transcript. Today it's Sea Limited's Q3 2024 report.
Ooh, yeah, this is a big one.
It is. The market's buzzing. Sea's stock is up big today.
A lot to unpack.
We've got Shopee, SeaMoney, Garena,
The whole shebang.
the whole 9 yards. And to help us make sense of it all, we've got our earnings call expert back with us.
Happy to be here.
Always a pleasure. Now, you've really been digging into this transcript.
I have.
What jumped out at you? What's the big headline from this report?
You know, for me, it's Sea's comeback story.
Oh.
They've had kind of a rough, period post-COVID.
Yeah.
But this quarter really shows they're back in the game.
Oh, okay. Interesting.
Solid growth across all three of their core businesses.
That's a big deal. That's a strong message.
Absolutely. The markets are taking notice.
So Sea's back, love it. But for our listeners who maybe haven't had a chance to read the transcript yet,
Sure.
can you break that growth down for us? Where are the big wins?
Well, let's kick things off with Shopee, their e-commerce platform.
Huh?
They're on track to hit their full-year guidance, about mid-20% year-on-year growth in GMV.
And there's basically like the total value of everything sold on Shopee.
Right, everything sold on their platform.
Got it.
But here's the really exciting part. They achieved positive adjusted EBITDA this quarter.
Ooh, in both Asia and Brazil, right?
That's right, both key markets.
Okay, now for our listeners who might not be, financial analysts,
Sure.
can you explain what adjusted EBITDA is? And why is it such a big deal that Shopee is positive now?
Adjusted EBITDA is basically a way to measure a company's core profitability.
Oh, so in
So
some
they're
way,
making money now.
they're making money. That's what we like to hear.
Exactly.
And especially in a market as competitive as e-commerce, right? I mean, that's got to be tough.
It is incredibly tough, but they've pulled it off.
That's a huge win, but I got to ask, how did they do it? What's the secret sauce here?
Well, there are a few factors at play. First, they've strategically increased their commission and advertising take rates.
Interesting. Now, wouldn't that make sellers unhappy, though?
You'd think so, right? But they were very clever about it.
Okay, I'm intrigued. How so?
Instead of just taking more, they focused on proving the value they offer.
Right.
They made their advertising more effective, gave sellers better tools, to track their return on investment, even streamlined the process of getting ads up and running.
So they're showing sellers that spending more on ads with Shopee actually makes them more money.
Precisely.
It's a win-win.
Exactly. It's not just about taking more, it's about giving more value in return.
Smart move. And I'm guessing the numbers back that up.
Oh, absolutely. This quarter, the number of sellers using Shopee's ads increased by over 10%.
Wow.
And the ad revenue they generated per seller jumped by 25% compared to last year.
So their strategy is working.
It's definitely resonating.
That's great to see, but it wasn't all about advertising, right?
Right.
I remember seeing something about their logistics arm, SPX Express.
Ah, yes, SPX.
That seemed to be a big factor too, right?
Huge factor. SPX is really changing the game for them.
Okay, how so?
They're taking more control of the delivery process, which means they can optimize for speed and efficiency.
And that means a smoother experience for both buyers and sellers?
Exactly. Everybody wins.
So it's like cutting out the middleman, they're streamlining the whole thing.
That's a great way to put it.
Clever.
And the results are impressive.
Lay 'em on me.
Over 50% of orders in Asia are now delivered through SPX, and in Brazil, it's over 70%.
Wow, those are big numbers.
And they've done this while reducing delivery times
Really?
and lowering costs per order.
Win, win, win.
You got it. A triple win.
No wonder Shopee was voted the best shopping site in Brazil.
Pretty impressive, right?
For a company that's only been there less than 5 years.
It speaks volumes about their commitment to service quality and building that robust logistics network.
Absolutely. All right, so we've covered Shopee. Let's move on to SeaMoney.
Okay.
Sea's digital financial services arm. Now, their loan book, it grew by a crazy 70% year on year.
Yeah, that's a lot of loans.
That is a lot of loans.
Yeah.
It makes you wonder, are they worried about all those loans going bad?
It's a valid concern.
Lending can be risky,
It absolutely can be.
especially when you're growing that fast.
You'd think so, right? But SeaMoney seems to be managing risk very effectively.
Oh.
Even with that massive growth, their non-performing loan ratio remains stable.
So they're not just throwing money at everyone who applies.
Nope, they're being very careful.
They're making smart decisions.
They're evaluating borrowers and making sure they're lending responsibly.
So they're not loan sharks.
Haha, more like Lone Stars.
Loan stars, I love it. But where are all these loans going? Is it just people buying stuff on Shopee?
That's where it gets really interesting.
Okay, tell me more.
More than half of their loans in Indonesia are what they call off Shopee,
Off Shopee.
meaning people are using them for things beyond just online shopping.
So like what? Give me an example.
Well, they gave an example of using SeaMoney to buy mobile phones in physical stores.
So like you walk into a store, pick out a phone, and finance it through SeaMoney.
Exactly. They're really stepping into the wider world of fintech,
It's like they're becoming a part of everyday life.
becoming a more integral part of people's financial lives.
It's a bold move. It's like they're saying, we're not just the financial arm of Shopee anymore.
Right.
We're a serious player in the fintech space.
They're aiming to be the go-to solution for all sorts of financial needs.
That's fascinating.
Very ambitious.
We'll definitely have to keep an eye on that.
Absolutely. It's a strategic shift that could really shake things up in the Southeast Asian fintech landscape.
All right, so Shopee's profitable, SeaMoney's branching out. Now, what about Garena, Sea's gaming division?
Garena, the gaming powerhouse.
Their flagship game, Free Fire, it's still on fire.
Incredible.
Bookings up over 30% year on year. And get this, over 100 million daily active users.
It's mind-blowing.
100 million people logging in every day to play this game.
They've built a gaming empire.
It's incredible. But, gaming trends change so fast.
They do.
How are they keeping Free Fire so popular? How are they staying ahead of the curve?
Their secret, constant innovation, and a deep understanding of their audience.
Okay, but give me specifics. What does that look like in practice?
They're constantly releasing new content, often inspired by, local trends and social media buzz.
Right.
They even partnered with a Thai zoo to bring a baby hippo into the game.
Wait, a baby hippo in the game?
You heard that right. It went viral, over 10 million views.
That's incredible. That's some creative marketing right there.
You got to keep things fresh and exciting in the gaming world.
For sure. And it sounds like Garena knows exactly how to do that.
They've definitely mastered the art of keeping players engaged.
Okay, so we've got Shopee making money, SeaMoney branching out into the real world, and Garena still dominating the gaming scene.
Sea Limited is firing on all cylinders.
They are. But what about the future? What do they say about their plans for 2025 and beyond?
Well, the execs were a bit tight-lipped about specific guidance for 2025.
Understandable. They don't want to give too much away.
But the message was clear. Growth is still the priority.
But not just any growth.
Right. Right. They emphasize sustainable, profitable growth.
So they're playing the long game.
Exactly. They're not just chasing user numbers anymore.
They want to build a solid, profitable business.
A business that can weather any storm.
Which makes sense, especially as they move into new areas, like those offline loans with SeaMoney.
Absolutely. A smart move.
But where do they see the biggest opportunities for growth? And what kind of challenges do they think they might face?
Those are excellent questions, and ones that we'll be diving into more in part 2 of our deep dive.
You heard it here first, folks. We're just getting started.
Stay tuned.
We'll be back to unpack all of that and more in just a bit.
Welcome back to Talk Tickers.
All right, so we spent part 1 digging into Sea Limited's Q3 performance. They crushed it.
They really did.
But now I want to dig a little deeper into the strategy behind these impressive numbers.
Sure.
Because it's not just about the numbers themselves, it's about how they got there.
Right. It's about how they're playing the game.
Exactly. So how are they doing it? What's the bigger picture here?
Well, Sea Limited is walking a tightrope, aggressive growth, but they're also laser focused on profitability.
It's a tough balance.
It's not easy, especially in the tech world where things move so fast.
So how are they managing this balancing act? Let's break it down, business by business.
Okay.
Starting with Shopee.
All right, Shopee, the e-commerce powerhouse.
What's the strategy behind their success?
Well, it's multifaceted. You've got the focus on competitive pricing.
Right. Got to keep those prices low.
Absolutely. And service quality, that's crucial in e-commerce.
Sure. People want a smooth experience.
But the real linchpin, the thing that really sets them apart, SPX Express.
Their logistics arm.
It's a game changer for them.
We've talked about SPX a bit already, but I think it's worth emphasizing why it's so important.
Absolutely.
Why is it so crucial to Shopee's success?
It comes down to control.
Okay.
By handling more of the delivery process themselves, they can cut costs and create a truly seamless experience.
For both buyers and sellers.
Exactly. And that's a huge competitive advantage.
Especially in regions like Southeast Asia, where, reliable logistics can be a challenge.
A huge challenge, yeah.
So they've basically built their own highway within the chaotic world of e-commerce deliveries.
That's a great analogy.
They're cutting through the traffic.
And they're not stopping there.
What else have they got up their sleeve?
Remember their move into live streaming?
Oh, yeah, they were early on that trend.
Very early, and they invested heavily, and now it's paying off big time.
You got to give them credit for being ahead of the curve on that one.
Absolutely. They saw the potential, and they went for it.
And now live streaming is just exploding in popularity.
It is. And for Shopee, it's not just about entertainment, it's about driving sales.
And engagement.
Right. Getting people interacting with the platform.
It's a great example of identifying a trend, adapting quickly, and then executing flawlessly.
They're a well-oiled machine.
So Shopee is firing on all cylinders. But what about SeaMoney?
Ah, SeaMoney, the fintech arm.
That off-Shopee loan strategy, that really caught my attention.
It's fascinating, isn't it?
It really is. It signals that they're aiming for a much bigger slice of the fintech pie.
They're not content with just serving Shopee users anymore.
They want to be a major player in the financial world.
They want to be the go-to solution.
So they're leveraging their existing user base, their data,
Right, they've got a treasure trove of data.
to expand into new markets, offer new products,
It's like they're building this whole financial ecosystem.
and doing it very strategically,
Oh, absolutely. Their risk management is incredibly disciplined.
which is crucial when you're talking about lending money.
It is. You can't just throw money at every applicant.
They're growing, but they're growing carefully.
They're keeping those non-performing loans in check.
That's what you want to see as a potential investor.
Absolutely. Controlled growth. That's what builds confidence.
Okay, let's switch gears again. Let's talk about Garena.
All right, Garena, the gaming giant,
Free Fire, it's their golden goose right now.
there's no denying that.
But can they keep this momentum going? Even the most popular games, they eventually fade.
That's the million-dollar question.
What's their long-term plan?
Well, their success with Free Fire, it really hinges on their ability to keep things fresh.
To keep innovating
Right. They've shown a real knack for tapping into local trends.
and incorporating them into the game.
Exactly. Think about those collaborations with local icons or even that baby hippo partnership.
So creative.
But maintaining that level of innovation over the long term.
That's tough.
It is. It's a high bar to set.
So what's their next move? What else are they doing?
Well, they're diversifying. They're not putting all their eggs in the Free Fire basket.
Okay.
Remember, they recently launched Need for Speed Mobile in a few key markets.
Oh, yeah, that was a big deal.
And they partnered with Tencent to bring Delta Force to Southeast Asia and a few other regions.
So they're expanding their reach.
They're building a more robust gaming ecosystem.
Smart move, because the competition in gaming is fierce.
It's cutthroat out there.
Can they replicate the success of Free Fire with these new titles?
It remains to be seen.
It'll be interesting to watch.
It will, but, they've got a good track record of understanding their users, tailoring games to local markets.
That gives them a fighting chance.
It does.
Okay, so we've talked about the strategy for each of their businesses, but now let's zoom out even further.
Okay.
What are some potential roadblocks that Sea Limited might face in the future?
Well, competition, it's always a factor in the tech world.
Always.
They've held their own so far, but rivals are constantly evolving.
New players are emerging.
Especially in e-commerce and fintech, those are hot markets.
And let's not forget about regulation.
Ah, yes, regulation.
As they expand into new markets, particularly with SeaMoney's ambitions,
It's going to get complicated.
they're going to have to navigate a whole web of rules and regulations.
And it varies from country to country. It's complex.
And then there's the big one, the macroeconomic picture.
Right, the global economy.
Global uncertainty. It could impact consumer spending.
Absolutely, and that could affect all three of their businesses.
So there are definitely challenges on the horizon.
There always are.
But, Sea Limited has proven they can adapt.
They're resourceful.
They've weathered storms before.
They have. They're resilient.
I have a feeling they're well equipped to handle whatever comes their way.
I agree. They've shown they can handle the pressure.
They've got a clear vision and they know how to execute.
A company to watch, that's for sure.
All right, that wraps up part 2 of our deep dive into Sea Limited.
We covered a lot of ground.
We did. Their strategic moves, the potential challenges, their impressive financials,
The whole 9 yards.
but we're not done yet.
Oh, no, we're just getting started.
In part 3, we're going to tackle some bigger questions raised by Sea's success.
I like where this is going.
What does their comeback tell us about the changing tech landscape in Southeast Asia?
Fascinating question.
What can other companies learn from their playbook?
We'll get into all of that.
Stay tuned for part 3. We'll be right back. Welcome back to Talk Tickers. We spent the last 2 parts really breaking down Sea Limited's Q3 performance.
Yeah, impressive stuff.
Their strategic wins, and even cooked up some hypothetical scenarios.
Oh, it's fun to speculate.
It is. But now I want to zoom out a bit.
Okay.
Think bigger picture.
I like it.
What does Sea's comeback story really tell us about the Southeast Asian tech scene?
I think it's a signal that things are maturing over there.
Maturing, how so?
It's not just about explosive user growth anymore,
Right.
Investors are demanding more.
More than just users.
They want to see profitability, sustainable business models, the whole package.
So companies that can't prove they can make money, they're in trouble.
Even if they have a huge user base, it's not enough anymore.
It's like survival of the fittest, adapt or die.
Exactly. And see, they adapted brilliantly.
They did?
They tightened their belts, streamlined operations, focused on getting more value from their existing users.
So they're a model for how to succeed in this new environment.
Absolutely, they're showing the way.
It's an inspiring story, but what lessons can other companies learn from Sea's playbook?
I think there are a few key takeaways.
Okay, lay them on me.
First off, prioritize a strong foundation.
What does that mean?
Invest in the core stuff, the things that aren't flashy but are essential.
Give me some examples.
Logistics, risk management, the building blocks of a sustainable business.
So don't just chase user growth at all costs.
Right. Sometimes you need to take a step back, refocus, and build a solid business model.
Like Sea did.
Exactly. Second, be adaptable. Embrace innovation.
Okay.
Sea wasn't afraid to change course when they needed to.
Yeah, like expanding SeaMoney beyond Shopee.
Right, or jumping into live streaming head first.
They're always on the lookout for new opportunities.
And they're not afraid to experiment, try new things.
That's important, that entrepreneurial spirit.
Absolutely. Third, understand your market deeply.
Yeah, you got to know your customer.
Sea's success, it comes from really knowing the Southeast Asian consumer.
They tailor their offerings. They leverage those cultural nuances.
Like those Free Fire collaborations with local icons or Shopee's hyper-local marketing campaigns.
So localization is
It's
key.
not one size fits all.
And finally, never underestimate the power of strong leadership.
Ah, yes, the human element.
Forrest Lai and his team, they've made tough decisions. They execute effectively.
They've guided Sea through some choppy waters.
They're the steady hand on the wheel.
And that makes all the difference.
Speaking of choppy waters, you ready for some speculation?
Hit me with it.
It's time for This Is Not Financial Advice.
My favorite segment.
All right, so picture this. Sea Limited, they go all in on Indonesia.
Okay.
They leverage SeaMoney's dominance there
They're already strong there.
to become the go-to financial solution for everything,
Everything.
not just online purchases. Bill payments, microloans, even things like transportation fares, all seamlessly integrated into their app.
So they'd be like the WeChat of Indonesia.
A super app, touching every aspect of people's lives.
That's a bold vision.
It is. But is it really that far-fetched?
I mean, they have the user base, the risk management expertise.
Exactly. And think about the potential rewards.
Huge market.
A massive market share in one of the fastest growing digital economies in the world.
Of course, there would be challenges.
There always are.
Regulatory hurdles, local competition, the complexity of building such an ecosystem.
It wouldn't be easy.
But hey, high risk, high reward, right?
That's what makes it fun to speculate.
And remember, folks,
This is all purely hypothetical.
do not make any investment decisions based on our wild ideas.
We're just having fun here, exploring the possibilities.
Always do your own research.
All right, so there you have it, folks. We've gone deep on Sea Limited's Q3 2024 earnings call,
We've covered a lot.
uncovered some strategic gems, explored the Southeast Asian tech landscape, dreamt up some crazy scenarios.
It's been a journey.
It has. We hope you enjoyed the ride.
As always, a pleasure to be here.
Always a pleasure having you with us. And remember, this is just our take on the information we've gathered. Always do your own research before making any investment decisions. Thanks for tuning in to Talk Tickers. We'll catch you next time for another deep dive.